Hello everyone, welcome back to our Accounting 210. In this video, we will talk about Chapter 9, the ungraded practice. You will find all this practice in the My Accounting Lab, so I put 7, 8, 9, 10, and then I will put 11, 12 later. So let's get started. And then all the notes will be also in the OneNote, this file. Chapter 9, if my memory is correct, we talked about the performance evaluation, right? So I think it's a very good topic. Just to think about your evaluation. Think about yourself as the CEO, and then you are evaluating all the department and the managers. How do you evaluate them? If you read the chapter and then you reorganize, kind of, if you understand it, my note will have a different order as the textbook, but general idea is the same. I personally think there are 3 ways to evaluate the manager's performance. The first way is you evaluate, right, with its budget. So you evaluate your actual with your budget, and then we learned. Sorry, that's chapter 10. That's chapter 10. Chapter 10 is performance evaluation. What I'm talking about. Goodness, sorry about that. Let's get start over, right? Just pretend you didn't hear anything. Okay, chapter 9. Chapter 9, what did we do? Chapter 9, we learned chapter 9. Sorry about that. It's my bad. Sorry, too many chapters. I kind of got confused. Chapter 9, talking about the first chapter 9, chapter 10, chapter 11 is my bad. Okay, chapter 9, and then we start talking about master budget, right? We start talking about master budget. And then chapter 10, chapter 11, we build on that thing. So we started having the budget and the variance. Okay, chapter 9, talking about master budget. Make sure you understand the chart in your textbook. So you always start with the sales budget, and then from sales budget, you can make your production budget, right? Production budget. For production budget, you have direct material, direct labor, and then manufacturing overhead. You also have all the operating budget, like the CEO's rent, the accountant salary, those things. Then you will get your budgeted operating income. So your revenue minus cost of goods sold, get your contribution gross margin, and then you minus all the period cost, you get your budgeted operating income, budgeted income statement. We call this as your production budget. So this is your production budget. And then you also have your finance budget, right? You start from the capital expenditure. So you have a capital expenditure. We talk about this for long-term assets, right? For long-term assets. Property, plant, and then equipment. You also have the cash budget. You have a cash payment, and then also cash collection. You also have cash payment and cash collection. Then you got your budgeted the cash balance. You also have all the other accounts we didn't even cover, but after you do this, you get your budgeted balance sheet, right? You got your budgeted balance sheet. What you need to know for the calculation part, all the concepts that you have to read textbook about for the calculation part, make sure especially the production budget. So basically it's your sales plus your ending inventory. You want to have some ending inventory as the safety stock, and then you get the units you needed, right? And you minus your beginning inventory, you get your production. And then also make sure you get cash payment budget and especially cash collection budget. So those are the 3 main calculations I personally think you should know for chapter 9. So let's look at all these practice. 24 questions, as I say, concept question, once I put it here, you have to know similar questions in the exam. I'll ask you, 1 plus 1 is 2. In the exam, I may ask you 1 plus what is 2. You have just to know the story. You cannot just memorize these concepts and expect to see the same questions. Budget do not provide benchmark. That's wrong, right? Budget, one of the advantage of having budget. Why you have a budget? You will study 10 hours per week for the accounting 210. So because you want to have a benchmark, you compare yourself. I'm not even checking. Capital expenditure budget is not a core component of the operating budget. Capital expenditure is not operating. Yeah, that's right, right? Because capital budgeting, capital expenditure is in the financing budget. It's not in the operating budget. That's right. Okay. So in the exam, I may ask you another question. I said, production budget is not a component of operating. That's wrong. So you should know what is what belongs to what. Okay. Next one, managers may intentionally build slack, right? So you need to know what's the meaning of that. You need to know what's the meaning of a budget stack. You need to know that. I'll put that in the handout. Next one, the whatever is in the financial budget. We said financial budget, capital expenditure, cash is a component. Okay, so it's cash, right? Sales, direct material, operating expense. Those are in the operating budget. Next one, what's the reflective order? What's the order? Okay, we always start from sales budget, and then we do production budget, and then we do direct material budget. So make sure, as I keep telling you, this chart is very important. Next one, what is the starting point for the we always start from sales budget, right? We always start from sales budget. Okay, I'll focus on some calculations. So let's do some numbers together. Let's say company began inventory and expected sales of this. If the ending inventory is this, how many units should produce? It's a production is a sales plus the ending minus the beginning gives you production. You have beginning of 18,000, you expect 29,000, ending you want to be 20,000. So you are planning to sell 29, you want to have 20, so you should have 49, but you already have 18. So that will give you 31, right? You have to produce 31,000. That's basic production. Next one, how many units? Very similar, right? You have an ending, beginning. It's very similar. I leave this to you. Next one. Okay. Am I doing what? Why we have so many? Oh, similar questions. Okay. Maybe I just want you to practice a lot, right? How many you need to produce? Very similar. You have ending, beginning, and then you want to sell. Next one. How many? Sorry, I put so many. I think I want you to practice. Beginning, sales, ending. Okay, very similar. Okay, let's look at this one. Let's look at this one. So they're asking about what? How many rope you need to produce? Okay, so you produce rope, and then you have all these. First quarter, second, third, you produce to sale, for the budget to sale. Okay. Inventory at the beginning of the year is this company wants 20% of next quarter sale at the end of this quarter. Okay, as any inventory. How many you need to produce for the first quarter? Okay, this is also okay. So beginning sales. What I'm trying to say. Sales plus ending minus beginning gives you production. Okay, so we are focusing on the first quarter. We plan to sell first quarter is 24,000, and then we said ending is next month time your percentage, right? 20% time 20,000 gives you 4,000. So this you have to make sure. Beginning is your 20%. Okay, so beginning you already have 4,300. Okay, so beginning you have 4,300, and then your production has to be okay. So 24,000 plus 4,000 minus 4,300. 23,700. Okay, so that's your production. Next one asking you said you sell this for $5, you have that ending inventory, 25% of next month budget units. How many units you need to produce in November? Okay, so how you will need to produce for November. So similar, right? Sales plus ending minus beginning gives you production. For November, you for November, look at this one. For November, sales is $36,000, but we need to get the units, right? We need to get the units. So 36,000 divided by 5. See, you just need to have one more step. So you want to sell 7,200, and then our ending is 25% of next month. So November next month is December. December we said 41,000, but each one selling price is $5. So December you try to sell this much, right? But we only need 25%, 0.25. That will be your desired ending inventory, 2,550, I believe. And then we minus the beginning. The beginning will be your percentage time your this month, right? Percentage time your this month. So our this month we said the sales is 72,000, 7,200, and then we time 25%. That will be our beginning, because this month beginning is last month ending. Last month for October ending is 25% of November, right? To understand the logic, this is very important. 1,800. Then if you do the numbers, so total will give you 72 plus 2,550 minus 1,800 gives me 7,950 units. This is a good practice. This is a good practice for you to think about how do we add everything together? How do we put everything together? A cash collection budget focus on the timing. This is correct, right? This is correct. And then capital expenditure budget is the best result. It's focusing on the long term, property, plant, and equipment on long term, right? So it's for the long term. Next one. So I think those questions. Sorry about that. Those questions are good practice for the production. One more time. Production budget. We said that the sales is, so we focus on the units, right? When we do the production, it's focusing on the units. If you see the dollar amount, you have to convert to units first. So your sales units plus your ending inventory in units, this is the percentage time your next month sales. And then minus your beginning. Beginning is a percentage time your this month sales. That is the number of production in units. Okay. Which of the following budget product cash inflow, cash outflow, and the balance sheet? We said what is financial budget, right? Budget balance sheet, yeah, financial budget. Next one, manager consider all of the following when you, so what you think or everything for the cash budget except for non-cash items. What is non-cash items? We said non-cash items, one is depreciation expense, right? It's non-cash, and then bad debt expense. So depreciation expense will never be in the cash balance, will never be in the cash budget, Next one. So we started doing about the cash collection, cash payment. I changed the color to look at this question. Asking about amount of cash that will be collected, cash collection, right? Cash collection. So you have, it basically is the cash sales plus the collection from your credit sales, right? From your credit sales. Let's look at this one. You collect 35% of the sales in the month 45, following 20% second month following sales. Okay, budget sales for this and then cash collection for July. So we think about July. So it seems that this one is all credit sales. There is no cash collection, no cash sales. So we just look at cash collection from credit sales. July, we think about July. So it will have 35% of July sales, 200,000 plus 45% of your June sales, because your June sales will be collected in next month, which is July. And then 20% of May sales, because May sales 20% will be collected in the second month. 1 second, right? Your May sales will be collected in the second month after the sale, which is July. So if you do all this, I believe you will get the number. Sorry, I just do the number. This will be, sorry about that, 435 times 200. I believe it's 70. Oh, so this is 70,000. And then this is, I will be trying to be fast. Okay, 108,000 plus 38,000, and then you add everything times 108 times. Sorry, not time, plus. My English is so bad now. I cannot believe it. I apologize for that. Okay, so this is a very typical. This is a very typical. Make sure you kind of get this cash collection. Next one. Did we just do this one? Okay, let's see. How about this one? Asking about. Okay, so it's a very similar, but the only difference is that 5% will never be collected, so we don't have that one. So you just use the 35 times your this month, 40 times your previous month, 20% times 2 months ago, and then the 5% will times 0 because it will be uncollected. Everyone knows what I'm talking about. I just put the formula here. I'm not going to do the number. So for November, it will be 35% time November, and then 40% time your October, and then, oh, sorry about that, and then plus 20% time your September. That's all. If you want to say that 5% times 0, but you don't need to write this part. Okay, next one. How about this one? October cash collection. You have this October, you have September, October, month sales. Okay, let's look at this one. Okay, let's look at this one. Said asking about your October. Now you have cash sales, right? You have cash sales, 10% on credit sale. Okay, so it's asking about your October. Your sales is 130,000. And then 30% will be cash. So that definitely will be collected. And then 10% will be collected in the month of sales. So your October's credit sales. So this is your October credit sales, and 10% will be collected. Okay, so this is 10%. And then we also have September, 90% of the credit sales. So your September credit sales is 70% of the total sales. And out of this, 90% will be collected in October. So this is very important. So this is your cash sales. This is your cash sales. This is your credit sales of October. This is your credit sales of September. Okay, so that's why we have to get. So this is your cash sales. This is your credit sales. This is your credit sales, and then you time the 10% or you time the 90%. Everybody knows what I'm talking about. So if you do that, I just want to show you the answer to be correct. This gives me 39,000 plus 130 times 0.7 times 0.1 gives me 9.1 plus, okay, 70 times 0.9. It gives me 63,000, and then I plus 9.1 thousand, I plus 39,000, I get the answer 111. So let me see. So this is how do you get it. For this type of question, you need to first separate cash sales and credit sales. Cash sales and credit sales. Next one, asking you about the total cash collection. Okay, so this one they already told you, right? They already said already put cash sales, credit sales. Then make sure you collect your previous credit sales. You collect your previous credit sales. Okay, so I'm not going to do it. I'm not going to do it. You can practice for what. Let me know if you have any question. Similarly, this one is very similar with that one. How about I just put the formula here, right? So asking about your April, So April, you first have a cash sales and then you have a credit collection. So April, your cash sale is 31,000, and then we focus on the credit collection. Credit collection 50% in the month of the sale. So April 18,000 and 50% will be collected, and then 43% of your March credit sales. Okay, credit sales 6,000 times your 43%. And then 2 months following the sales. That's so weird. Because you don't really have it, right? You don't really have it. Hold on. March, April, May, June, credit sales are 50% in the month of the sales, okay? Okay, 50%. 43 will be following, so your April will be March. We don't have this 5% 2 months, because if you want to get April, you need to get February. We don't have the number. I don't know. I have no idea how do you do this one. Okay, you know what I'm talking about. I hope you know what. I hope I'm not the only one who is talking nonsense. You may feel I'm talking nonsense. Like this one, you have May, you have April, you have a March. For this one, it tells you April. Then you need to have a February, right? You need to have a February. I have no idea for this one. Hey, look, I may delete this one, so don't even worry about this one. I have no idea. I'm going to delete this one. This is the question 20. Okay, I'm going to delete this one. Sorry about that. Okay, so I put my formula for this one. So this is a bad question. Don't worry about this one. I put my formula for question 19. So it's asking about our May, right? So May is also cash plus your credit. So our May, the cash is 35,000, and then we plus the credit sales. 62% of the May credit sales, 43,000, plus 30% of our April credit sales, and then 5% of our March credit sales. That's it. And if you want to put 3% times 0, you can do that. So this is how you do cash collection. I will delete this one. Okay, next one said asking you about a non-cash expense, right? Non-cash, we already know non-cash is depreciation expense and bad debt. This question, I'm not going to do this one. I think it's very similar with your homework assignment. So you need to do units, time, plus ending, total needed, minus your beginning, and then units of production. So what I put it here also for the quarter, just a very quick tips is for the quarter, right? We said January 1st is the beginning of your January and also beginning of your quarter 1. Now it's talking about the second quarter, sorry about that. But March 31st is the end of March, but it's also the end of your first quarter. So make sure when you have your beginning quarter is also beginning of April. Your ending quarter is also ending of June. Okay, 23. Okay, so this one is also similar with your take-home assignment. I'm not going to do it. Basically, it's your we just break down, you have a cash sales and then your credit sales, so you do each month and you add them together, you will get a quarter. Okay, asking you about this, right? Asking you about the cash payment. Let's look at this one. Cash payment, how much will be paid in the next month? Oh, wow, wow, wow. A lot of information. Wow, it's a lot. Okay, so I'm not going to do this. I think I'm not going to put this big question here. I think when we learned our textbook, we said for the direct material, right? So we said, hey, if you bought direct material 100,000, but you pay 60% this month and 40% next month, then let's say you have your January, you have your February, you have your March. Then we said for January you purchased 100,000, March you purchased 200,000, February, March you purchased 300,000. Then I'll ask you about your February cash payment for direct material. Then your February cash payment for material will first 200,000 of your this month, right? You will pay 60%. But your previous month, your January, you also have to pay 40% of your January, the direct material. So your February cash payment for the direct material will be 160,000. Do you know what I'm talking about? I hope you know what I believe most of you know what I'm talking about. If you don't know, let me know your concern. I think that's all you need to know for cash payment. I don't think I will give you so hard questions there, but make sure to go back to our direct material, the cash payment, and then how do we do the cash payment? It's almost the opposite of your cash collection. Okay, then thank you. It's a long video. Sorry about that. Thank you. Let me know if you have any question for chapter 9. I see you in the next video. Thank you.